Well, hello, members. It's LA, and it's a new year, and it's time for us to, focus on not just what the next week or two might bring, but I'm going to do something a little different and talk about what I think the new year is going to develop as, or what it could develop as we go forward. So, bear with me. It's going to be a little bit different than what we usually do. Let's quickly review though where we're at, and that is that we started off the year negative. The percentage change for the week, you can see here, is pretty negative last week. That was not expected, and that is actually a pretty big negative. The caveat, of course, is that it was holiday trading. It's hard to put a lot of stock into what happens in the holidays, up or down, whether they take it away or they allow it to hold up there and then they take it away at the beginning of the year. Whatever the case, it was negative last week, and the Friday's numbers you can see here, Russell the most negative, but actually the Russell performed the best when we look at it from a different perspective. So, mixed start, to the beginning of the year and the end of the year, and I'll get into that in just a second. I want to flip over though, and I want to talk about big term picture, large scale, macro view first. And I want to go back to, this is a weekly chart going back to 2006 through 2008. And what you see here is this particular bar is the S&P 500. This is the financials. And then this is the ITB, which is the housing market. And in retrospect, we all know that the housing market was the bust. Eventually, the financials got croaked as a result of it, and eventually it brought the whole market down. And if you go back and you look at the ITB, this is when it came into existence. The XHB was there before, but the XHB contains things outside of just housing. But if we look here, the real breakdown, the highs were in 2007. That was this peak on the housing markets, and then the breakdown was here. And so early 2007, we saw the breakdown, and as you know, it was September of 2009 that we saw the breakdown in the markets, which is out. 2008, which is out here. Now, what I want to note or to show you is that the peak in the S&P 500's Xlf, right, was here and here, and this was basically in that September, I believe it's the September time frame. Let me get the top on it here. It was March, May, so the May time frame. So in the May time frame, we got the peak in the Xlf, and of course we didn't get the peak in the general markets until September, November, October, that next October of the same year, 2007. What you should note though is you had higher highs here, right, when you had lower highs here, and you actually had a breakdown taking place in a major sector. And it's major when you look back at it. Of course, ITB is a major sector in general, and I probably should put it on my list of sectors that we look at. Matter of fact, as I talk about it here, I probably will. But the key here is that you had a major sector breaking down. That eventually showed up as divergence in a major sector with respect to the market, and as you can see, the XLF underperformed quite a bit all the way after that. And eventually it also, broke down here, and that was the beginning of the end, and that's here. And so we're, before we even get to 2008, and then eventually the general market also failed on a retest regen right there, and that was the key, right? And that time frame, if you look back on it, was May of 2008. Right? And it was all downhill from there. So you get a breakdown, a retest, regenerate, bearish, and a total collapse that follows after that. Now let's look at what's happening now. And we all know that the energy market is getting croaked. The energy is in the blue, S&P 500 is in black. So at this particular point in time, we've got a major sector again, has a breakdown, and it has a major breakdown. And that major breakdown was right here. The retest, that was on this point right here. The retest regen now has failed to get higher, and so it's regenerating lower and has regenerated lower. Now we have another retest regen that's going to try to take place, and this is on a weekly. And I suspect we'll get up to this level on the weekly and retest and probably regenerate lower again. What we don't see yet is we don't see other major sectors starting to follow. It's only on the XLE. That was true back when the ITB did its thing. But the similarities here are very strong in that we have another major sector having a major collapse. And I suspect somewhere as this year gets going, maybe out to March, April, May, June, we're going to see the same sort of thing potentially take place in other major sectors. And that's what we have to be focused on this year. It's a big event potentially. We know that the MTTF on the long-term time frame is, in the total nosebleed mode, at 89, 90%. We know a correction is going to come. Now, the major difference I think that exists now versus the 2007 time frame is the cash balances, which we've talked about before, are very different this time around than they were then. As we saw last week, the the cash balances of the corporations, back here, very different, right, than what we see now. A lot more money in the coffers. That's going to make the corporations much tougher to roll over, right? And I suspect they're going to put that money to work to some extent if and when we get some sort of a downturn. So the idea here is that, yes, I think the potential for some sort of a, big push to the downside is going to develop this year. That potential is there. But that reset, I don't think is going to be anything like we saw in 2000 or 2007, in that we're going to see this market turn around, and instead of have some sort of a long-term, dynamic attempt, but take a year and a half to recover, it's going to be more like 3 or 4 months. And so these V-shaped reversals that we've seen, if we look at like the S&P 500 on this time frame being just a weekly, but these V-shaped reversals we've seen, where these things just come down, go straight back up, I think we're going to see this take place on the monthly chart. And if we pull the monthly chart in, we only go back, of course, about 60 bars, so we're only going to go back to the early 2011 period here. But I'm expecting that what we're going to see is we're going to see some sort of drop like we saw back here, right, and this thing come back up. Another V-shaped type reversal on the monthly, and potentially a deep one. In other words, we could see a deep drop. If this turns out to be what we break versus this, we could see a deep drop and then an elongated kind of V back up off of that, just like we saw back here. The cash balances, I suspect, are what's going to save this market from being some sort of a long-term, takes me a year to get back or a year and a half to get back. Instead, we come back 3 or 4 months later and start making highs again. So that's a huge opportunity if it develops and if it turns out to be that. and it's something that you want to miss the spike down, of course, but you definitely want to be on the spike back up when it takes place. And that's what we should be focused on, I suspect, this year. And that's kind of where my attention is on the longer term picture. So I wanted to digress. I don't want to spend too much more time on that, but I want to lay that out. I'm going to have an article about that at some point because I suspect that's the way this is going to work out this year. I think there's a good chance as a result of what's happening in one of the major sectors. Fundamentally, now switching back to what's going to happen the next 2 or 3 weeks. Last week, as I said, we had those down days. It was not expected. I didn't expect that to happen. Anytime something happens that you don't see in the tape, that's a red flag. It's something that you raise your eyebrows and say, okay, well, that's not what it should have done. Now, I do have to say that it was on low volume holiday trading, so I put a lot less emphasis on it as a result of that, but nevertheless, it wasn't what I expected. Friday, we also had the reversal gap. And again, it's holiday trading, but we opened higher, closed lower. That's not a good sign. Also note that now we have these divergent indexes, which is actually the opposite of last year. And so what I'm talking about here is, let's just look at these real quick. The Dow, and let's take and look at this from the perspective of the retest regenerate zones. So you had a retest regenerate here, bullish, right underneath it. 2 bars now. Not a good scenario there. If I look at it from the Sp500 point of view, same thing, right? Does a retest regenerate? Fails. And that's off this prior high. And we talked about this being a potential, and happening this week or whenever the bullish retest regen was to take place, because it was a very small one and we hadn't extended very far past it. And that typically leads to a higher probability that it is going to fail. What we also talked about was that if that happened, it would probably bring the Russell back to do its retest regenerate, and there was a much higher probability that this one would actually hold. It came into it Friday, bounced out of it. Volumes, of course, were low on the holiday trading. If this holds, this, of course, is a nice feather in the cap for the bulls. You've got the ABCD structure going here, right, on this time frame if it works. And so the Russell, now last year, weakest index, it looks like it potentially may be the stronger of the indexes, and a total reversal of what we saw last year. So that's where the indexes line up now, how they look now. And when I think about it from the perspective of what happened, that's a good thing in that the Russell did do what we expected. That's probably going to hold these up here this week. I suspect this week's going to end up more of a sideways tug of war. I thought actually that the ECB was going to announce this week, which is what has been the case for the past few years, but I forgot they actually changed where they're going to announce every couple of months now. That means that their schedule's different. They will announce the 3rd week of January, and that's important because, of course, so much of the world markets are trading near highs or at highs as a result of all the central bank intervention around the world. And so that's going to come a little later. So that big news element there isn't in effect. What is in effect, of course, is earnings season. And that earnings season is going to be taking place starting, of course, this week. So divergent indexes, it's the opposite of last year. If I look at the dollar just continues to soar at new highs. And frankly, that's an issue. And if I pop up that chart, here's the dollar. Now, the dollar actually has an ABCD structure up on the daily and the weekly, and we're close to finishing both of them. And so the dollar may actually be coming to an end in terms of this surge that it's been on. If I look at it here on the monthly, you can see it's got a huge spike up again. And as we've talked about before, these spikes higher in the dollar typically end up being an issue for the equities. And as you can see, this thing has just been knocking out swing point lows on the way up that were over here on the left side that we can't see anymore, and surging. And although there's an ABCD structure that's almost done, if this thing really does go parabolic, I think that's going to be a real negative. It's already a negative in a number of the foreign markets. It has been on those markets. It needs to top out and settle down again like it did here to allow these equity markets probably around the world to try to move higher. The other effect of this, of course, is that it's killing commodities, and although it's problematic if it continues to surge, it does look like it might be at a point where it is going to settle down and allow the markets to at least hold ranges or potentially push higher again. The negatives, as we talked about already, these failed on retest regenerates. It's also a negative that you saw it on the XLI, the XLK, and the XLP also. So multiple sectors doing retest regenerate failures on the bullish side. The NDX still weak, right? We can't see. We got stopped out of Apple this week. We're not seeing the large cap technology move us higher. The biotechs are kind of holding in a range, and the SOX actually filled a gap, tested it, held, but filled a gap. So those major drivers in the NDX still not there. They're going to have to come back if this market's going to move higher. The positives last week, those retest regenerate on the Russell did hold, and it's also holding on the weekly so far, and so that's a big positive and probably the largest positive. You've also got those ABCD structures on the weekly. I didn't show those. Let me see here. I can show those. Let me pop over, and well, I just showed it on the Russell, but I didn't show it on the indexes. Let me pop that back up here just a second. So if I go in and grab the weekly on even the S&P, which is weaker this week, you can still see this big ABCD structure. Now, of course, that implies that this market's going to work sideways to higher to let this fire, right? I mean, it's already fired. It's now just a question of will it hold. You know, if it breaks down below here, all bets are off because then that ABCD structure is broken. But, you know, if it holds in here somewhere, even if it holds back into this area, you know, it's still an ABCD structure of the upside. It's just taking a while to get going. So that's still a positive and will be unless we get a total breakdown. And frankly, I don't expect that, although anything's possible. But I do think this week is going to tell us a lot with respect to where we're going on these markets. The fundamentals, there really weren't any fundamental positives last week. The negatives, as you can see here, is, you know, we had exhibited weaker growth again in almost all the data points we got. The commodity markets have just been decimated, and the dollar keeps soaring, and these two, of course, are tied together. What would I be watching for this next week? Well, we're going to get volume back, and that's a big thing. And the real question is, are we going to get some sort of range trade develop? In other words, are earnings going to be bought or sold? And what do they say about dollar strength? In other words, when companies come out, are they going to be talking about the dollar? Are they going to be saying it's a negative, which it is? Are they going to be blaming it, in other words? And, you know, does that become the focal point? And if it does, I think it's a negative. And so that we'll be watching for. And then the other question, of course, is can the small caps, can the Russell actually come back up and make a high? Because if it does, right, if the Russell pops back up here and makes a new high, I suspect the rest of the market is going to follow it. And so that's kind of, you know, what's coming up. If I think about the economics in terms of highlights, there's a lot of data again this week. You can see it all here. We got FOMC meeting notes. We got a bunch of PMIs again. Industrial production numbers at the end of the week. The Great Britain is going to have their announcement, but really the big one is the ECB, and that doesn't come out until the third week of January. So a lot of data, and of course a lot of earnings starting to come out this week. All the big cap financials will be reporting: Citigroup, Goldman Sachs, Wells Fargo, JP Morgan. So you get all those. You got Intel coming. You know, Apple's not far behind. There's a lot of big earnings coming out the first 2 weeks. How the market trades off those earnings is probably going to set the tone for the rest of January. Geopolitically, I do expect this is going to be a problem sometime this year. There's a lot of money that had been taken away from a lot of these dictators. And I put Russia in that group, Iran, Venezuela. Those are all basically dictatorships. They just lost like half their revenue sources. You know that's going to create a problem. It doesn't immediately create the problem. I mean, there's the shock factor, right? But it's if that oil does not recover, and I don't suspect it will, somewhere down the road here, 2, 3, 4, 5 months, those or that shock, right, that revenue decrease is really going to start being felt. And that's probably going to drive them to do something, right, to take the economic hardship. And usually the way governments deal with that, especially dictatorships, is they raise the rhetoric and they start blaming the United States or somebody else for their problems, and they do things to aggravate and upset the geopolitical situation. So I suspect that will come into focus as the year wears on. The bottom line is that Santa Claus rally did not extend. That was what we probably should have seen given the charts. When I see something like that, it makes me not nervous, but it makes me take and say to myself, okay, if it doesn't do what it should, then either I'm wrong or the market's wrong. Now, I do discount last week because of holiday trading. This week there will be no discounts. It either has to start to perform and show us that it wants to move higher, or we're at least range trading for a while, which is what those breaks suggest on the S&P and the Dow. Or potentially, we're going to roll back over, and that's what we have to guard against and be careful of. My intuition is that we'll probably range trade this week. As a result of that, to me, it's a week for us to absorb and interpret rather than act. I don't think we should be doing much. Personally, I think you should already be set in your portfolios and really trying to see, okay, what does this new year want to do? It's that time of the year where I don't think you want to jump on anything long or short in a larger way, but instead let it tell us what it wants to do. The markets here are at a crossroads, and the signals are mixed. And when that's the case, you got to stay with the trend, but you have to be a little bit more careful, and I think that's the way we're positioned. In the portfolio, some things we got out of again, some things we got into. The ZLT came back in and let us in on it. We're in a Doug trade here, the DUG, but I don't think we're going to stay in it. I'm probably going to sell it out first thing in the morning. I have an order for that in the portfolio. We stopped out on some stuff last week and got thinner, and I think that's okay. Now, as I was talking about here, if the dollar is topping, there may be an opportunity as a result of that, and that opportunity potentially is over in the gold trade. And I want to show you what I'm thinking with respect to that. And let me pop up these charts. And if I look at it, let's look at it together here. If I look at gold, gold itself, I'm on a daily chart. Gold itself came down, tested. Again, we're holiday trading, so we have to be careful. But so far, gold is holding at a higher level. And this is despite the dollar making new highs and actually surging. That's not what you would expect here. You would expect this to be at lows or new lows, right? It's not. And not only is it not, but the gold stocks themselves, the GDX, is not doing it either, right? And as a matter of fact, on Friday, it actually surged. Now, when I look inside this thing, there's some stocks here that really look pretty strong. If I look at EGO, the surges to the upside have been rather dramatic volume. This thing is setting up a nice, if you look at this on a weekly, it's setting up a nice ABCD structure to try to go higher. So that's EGO. If I look at another one, there's about 5 of them or 4 of them here. AEM. Right, it's down here, it's doing a retest regen. It already tried once, this is on the weekly, tried once on the retest regen off of this low. Let me pull this up so you can see it more clearly. So you got a retest regen off of this low, tried it here, couldn't get over it. Now it's right back up there, and look at the volume tells on this They don't look bad even on the weekly, but if you pull it in on the daily, it looks even better. So my point is that some of these stocks are really starting to look as if they want to move higher. That says that there's probably an opportunity in gold if that dollar's topping, which it probably is given the extensions on both the daily and the weekly. So gold may be a place for an opportunity. I'm going to be watching this and trying to do something with it probably this week. So that's where I'm looking. I don't have a lot to say about the individual stocks. You can read about those here, and the video is already long, so I'm not going to go into them all. I've thrown the earning numbers in. Typically, unless it's a core position, I usually don't want to be in that stock in front of earnings. The only exception might be this NXPI. I really like the way this one's behaving, and I think it may end up a core position. So I suspect I will hang on to it. But as far as the biotechs, I'll probably be out of those. We've got most everything else in indexes and ETFs, on those or sectors. And so that kind of keeps us away from earnings shock. And then the earnings down here. And we've narrowed these down other than ZLTQ, which we just put some more back on after we sold out higher. And I really like that chart still. But we've narrowed down elsewhere to not get hurt on earnings, which is what we have to do. So observe, absorb, interpret. That's what we should be doing this week. Use this week to tell us what the next several weeks is probably going to be, and then use that to position properly for what that is, whether it's up or down. Okay? Well, I hope that helps. I think it's going to be a great new year, but as I said at the very beginning here, this may be the year we finally get a reset on the long-term time frame. Now, that doesn't mean we go bearish, especially if the way I envision it works out. It simply means we transition. We do the bearish on the intermediate term time frames, we go to sideways on the long-term time frames, and then we go right back the other way and turn them all around again. Huge opportunity if it works out that way. Of course, if it doesn't work out that way, then I will have been wrong in my thoughts, but we can interpret it as we go and adjust as we go, which is the great part of reading these charts on all three time frames. Thanks a lot, members. I really look forward to a great new year here. I hope you're excited about it as I am. And, we will have a lot of opportunity. We just have to stay on the right side of the trade in the short to intermediate term time frames, and we'll be where we need to be. Have yourself a great one, and I look forward to the new year. Hope you do too. Take care.